Welcome back again. We have covered a lot of ground already, and now we are finally ready to start looking for some interesting investment opportunities. But there are literally thousands of stocks listed on the US stock market alone, so where do we begin? Well, fortunately the internet has given us access to amazing tools and resources which make your life as an investor a lot easier. This lesson will explain several ways to perform the first crucial step in finding attractive investment opportunities, the idea generation phase. Finding interesting stocks to analyze is something many investors struggle with, but it is really not that hard. It is true that there are thousands of stocks available, but only a handful of them will meet all your criteria. The trick is therefore to filter out the garbage, so you don't have to waste time on them, and so you can focus all your attention on thoroughly analyzing the hidden gems. So what are we looking for? Well, if you've read the book The 10 Best Investors in the World, which is part of Module 1, you know that all these investors have one thing in common. They are looking for stocks trading at bargain prices. The process I am going to teach you in the next couple of lessons is mostly based on the investment philosophy of Warren Buffett and Charlie Munger. In other words, we will not only focus on finding cheap companies, but these companies must also be financially strong businesses with above average profitability and low debt levels. The goal of our initial filtering process is to identify these strong businesses, because in the words of Warren Buffett, it is far better to buy a wonderful company at a fair price than a fair company at a wonderful price. The way we are going to do this is by using so-called stock screeners. A stock screener is nothing more than an online tool which allows you to input some criteria and then shows you which stocks meet these criteria. The rest is dropped from the list. It's as simple as that. The reason why I prefer to use free online stock screeners to generate investment ideas is because it allows you to make an independent, objective selection of stocks, which is not influenced by opinions and emotions of others, but purely based on fundamental data. Besides, it is an amazing way to limit the scope of your research from thousands of available stocks to less than 100 stocks to analyze. There are several free stock screeners available online, and most of them are pretty good. Go to valuespreadsheet.com/resources for a complete list of recommended value investing resources, including stock screeners. In this lesson we will be using Google Finance Stock Screener. You can follow along live. Go to finance.google.com and then click on Stock Screener in the menu on the left side of the page. If you don't input anything, Google returns around 30,000 companies. This might be a bit much. Initially, the screener shows 4 criteria: market cap, PE ratio, dividend yield, and the 52-week price change. Slide one of the sliders or type in a different value in one of the input fields and you'll see that the results are filtered, making the list of companies shorter. And that's just what we want. Perfect. Remember the financial ratios we covered in lesson 12? Great, because this is where we can use them to find interesting stocks to invest in. You can add them to the stock screener in just a few simple clicks. To filter on one of these ratios, click Add Criteria. Now find the ratio you are looking for and click on it to add it to the screener. For example, click on Operating Metrics and then on Return on Equity. And then on Add Criteria. Return on Equity is now added to your stock screener. Next, slide the left slider to the right until the value of the left input box is approximately 15. The list will now only contain stocks with an average return on equity over the past 5 years of 15% or higher. This is great because this means that each of the companies that are still in the list show signs of above average profitability, which is one of the things we are looking for. To make the filter even stricter, you could increase the threshold even further to above 15%, but this is not necessary. However, there are still way too many companies in the list, so let's apply another criteria. This time we want to filter out the companies which have too much long-term debt on their balance sheet. To do this, click Add Criteria, Financial Ratios, and then Long-term Debt to Equity, and finally Add Criteria. The long-term debt to equity ratio is now added to your stock screener. Enter a value of 0.5 in the right input field. The list will now only contain stocks with a return on equity higher than 15% and a debt to equity ratio lower than 0.5. So the remaining companies are both highly profitable and have manageable debt levels. Perfect. Still, a couple of hundred companies in the list though, so let's continue. We only want companies that can easily pay their short-term obligations. To do this, we are going to add the current ratio to our stock screener. I think you know how to do this by now. Hint, it's the same menu as the debt to equity ratio you just added. Done? Nice, then let's continue. As we discussed in lesson 12, we preferably look for companies which have twice as much current assets than current liabilities. This means we are looking for a current ratio of 2 or higher. Add a value of 2 in the left input box. Sweet. Now our list contains highly profitable companies with low debt levels and plenty of assets to pay their short-term obligations. We're getting there, but we have to filter out some more stocks to make the list manageable. So what else can you filter on? Well, it is a well-known fact that stocks from small companies tend to significantly outperform stocks from large companies. The reason is because less analysts, journalists and investors are following those smaller stocks, and therefore they are more often mispriced, which offers great opportunities for value investors. To only display small cap stocks, you could set the market cap between 50 million and 1 billion. It is tricky to filter on PE ratio, because PE ratios differ greatly per industry and thus you potentially exclude perfectly sound investment ideas. On top of that, PE in itself does not say much about whether or not a company is undervalued with respect to its intrinsic value. For similar reasons, I dislike filtering on earnings per share growth rate, because a solid company with 0% growth can still be an interesting buy if the price is right. However, I do sometimes add a dividend yield criteria of 1% or more, because I just like to receive a steady dividend, and so did Benjamin Graham and Walter Schloss, two of the best investors the world has ever seen. By now you should have a manageable list of 50 companies or less, which we will analyze further in the upcoming lesson. Of course, using stock screeners is just one way of generating investment ideas. I will now briefly highlight some other ways you can find interesting stocks to analyze. Old school value. If you find it difficult to come up with your own screening criteria, you could check out the predefined stock screeners on oldschoolvalue.com. Another interesting way to get ideas is to see what the best investors in the world are buying. You can view their portfolios on gurufocus.com. There are many free and paid newsletters out there which pitch stock ideas. This could be a source of interesting information, but I always have a problem with weekly or monthly newsletters because there are times when there are simply no real bargains to find. But these newsletters still have to give you some stock tips, which means that some of these tips will be rubbish. 52-week low lists. It can be very interesting to have a look at stocks which are trading near their lowest price in 52 weeks, because these stocks have already fallen so far that they might be trading at a discount to intrinsic value. There are many sites which show these 52-week low lists, but I like the one from Guru Focus, which you can find at gurufocus.com/52weeklow.php. Finally, the American business magazine Forbes publishes some interesting lists you can use to find interesting companies. Look for example at America's Most Trustworthy Companies list to find a list of companies with trustworthy management and transparent accounting practices. Also interesting is the America's Best Small Companies list, which shows you a list of the best performing small cap companies in the US. My last tip is to do your own research and stick to your strategy. Do not let hyped press releases or friends who shared stock tips with you influence your rational decision-making process. To summarize, the internet has given us access to amazing tools and resources which make it easier for you to generate investment ideas. There are thousands of stocks available, but only a handful of them will meet all your criteria, so you need a way to filter out the garbage. The goal of the initial filtering process is to identify financially strong businesses with above average profitability and low debt levels, who have enough cash to pay their short-term obligations. A stock screener is an online filtering tool which allows you to input some criteria and then shows you which stocks meet these criteria. Filter on return on equity higher than 15% to return companies with above average profitability. Filter on debt to equity lower than 0.5 to return companies with low debt levels. Filter on current ratio higher than 2 to return companies which can easily pay their short-term obligations. There are many other criteria you can filter on, like market cap to show only small cap stocks, or dividend yield to only show companies which are paying a dividend. I do not recommend filtering on PE ratio or earnings growth, because this might exclude perfectly sound investment ideas, since a financially healthy company with 0% growth can still be an attractive investment if the price is right. Besides stock screeners, there are many other ways of generating investment ideas, like newsletters and 52-week low lists. Okay, now that you have a list of initial ideas, we will perform some serious fundamental analysis on them in the next lesson to filter the list down even further. If you haven't done so already, please leave me an honest review on Udemy. This would really help the ranking of the course, so more people will be able to find out about it. Thank you so much.